Hello traders, welcome to another little short video here. I wanted to make this because I think it's an important topic and relevant to our development as traders and what we're doing here. I wanted to talk to you about the difference between adding to a losing trade and adding into your position. Okay, there's two ways that you can look at this. Okay, whenever you're adding into a position that's going against you, in theory you're really adding to a losing position. Okay, but there's a difference between scaling in and adding into a losing position. And the difference from my perspective is that if you're trading 10 contracts as your normal everyday position size, and you feel like you might be entering early in this particular area here for whatever reason, you can enter a partial position size, 5 contracts or 4 contracts or 8 contracts, whatever it is. You enter with half or less than half of what you normally trade and give yourself an opportunity that the market produces a complex correction against you, still respecting the framework of the structure. You can add into a position in a deeper area, average in a better price, improve your risk reward, and give yourself an opportunity of a graceful exit if price just doesn't come back. Okay, that is what I was looking to achieve here. I kind of messed it up a little bit, but we'll go through that as we talk about the developments of this particular situation. I also wanted to show it since you guys most of you followed this trade with me throughout the day. I didn't want to do it with the benefit of hindsight and with something that's hypothetical. I want you to see it as it played out in real time, what I was looking for, what I achieved, and what I could have walked away with, and the decisions that I made that caused me to still get a better than expected exit had I exited here, but still gave myself an opportunity to participate. So I want to make sure that we are clear on adding to a losing position versus adding to your trade. Okay, there's a couple of fundamental rules here, very, very strict rules when you do this. Number one is you have to be, the reasons for entering the trade must still be valid. Okay, so this was the lower high of this overall move, and this was the low, which was a retest here. Okay, so we were still within this high and this low. If price breaks above this area, my reasons for getting into this trade are no longer valid. They are no longer there, and therefore I need to be out of this position, not looking to add to my position. Okay, so that's the difference. The main difference is you cannot add to a trade once all the reasons for getting into that trade are no longer there. When those reasons for entering your trade are no longer there, you need to cut that loss and just exit the trade. Okay, otherwise you're not only adding to a losing position, you're adding against expectations, you're adding against the strength of the market, you're adding against everything. Okay, so that's important. Okay, and the other thing is, if your full position size is 10 points and you entered here, you need to suck on that. Okay, even if price comes up here, you know that your stop loss is up here, you need to just suck on it. Okay, because now you're adding another full position which your account might not be able to handle. You may be over leveraging your position and really causing a huge detriment to your account if you take a hit. Okay, because not only you're taking a hit, but now you're compounding that hit times a full position. Okay, so it's important to also understand that. Okay, now being that I trade normally 10 to 20 contracts, and I was in with 6, adding another 6 was really nothing, and it just gave me an opportunity to look for my graceful exit. Okay, so understand that difference, and I hope everyone is clear on that. Okay, so when I came to the market today, I came in late. It was after the market opened around 9:30. I really didn't have a chance to post the pre-market expectations and what was going on. I wish I would have been here at this point in time. There was a nice, beautiful ABCD completion into this area. Overall, the market had produced a new structure low here. Projection was big. We didn't really expect this deep correction or complex correction into this area, but the structure was good and it held nicely, and the market really accelerated with volume coming down into this area to test some of these areas where the market had bought fairly well. So when the buyers and sellers were mixing it up in here, we didn't really see the reaction that we had here. So you would have expected that reaction to be stronger. So I didn't feel compelled to buy in here long, because the expectation was for a new structure low, and the market had already produced a retest of this low. So all of those reasons had me on the side of looking for shorts. As the buyers attempted to come in here with pretty decent volume, they really didn't get anywhere, and the market went ahead and produced a short-term new structure low here to retest this low. So the market in the intraday order flow broke structure here to make a new structure low. Okay, so the market corrected deep here, had good volume. I wasn't willing to short here into an area of support. That is something that's against my religion. I never ever trade short into an area that has provided support in the past, or good support, unless I have room to protect myself. Okay, so had the market made another new structural, now we have further confirmation, further retest of this area here. We have good volume that again didn't go anywhere. We had good volume coming down. Again, the buyers were able to find something. So when the market came up into this area and we had structure here, we had structure here, an area of structure here, and we had good rotation here. This rotation was a little better, but since I closed my chart down and reloaded, the candles changed a little bit. We had really good rotation, rejection of price of that level. So I entered without hesitation, knowing that I might be entering into this a little early because volume is increasing, and now the buyers were able to make a new structure high from here. So that's fine. I entered with 6 contracts, wasn't a big deal. Then the market went ahead and went down, and it was a back and forth all morning long. Okay, I spent most of the time in profit, anywhere between 10 to 8 points, 14 points. Price stayed here longer than I would have wanted to, and the accumulation of the orders here in volume wise favored the bears. So imbalance should have favored the bears, and the bears should have been able to take price down. But in order for imbalance to happen, one side has to accumulate more orders overall than the other. Otherwise, it can't go down. Enough people have to sell here. Okay, but as price hangs out here, what happens? A lot of people start saying, oh, this support is going to hold, let me take profit. So all these shorts started taking profit. Okay, the uncommitted buyers that were on the fence whether they should buy here or not started seeing price stall, started seeing the buyers entering with some volume. So some of those people taking profit, and they said, okay, it's going to hold, let me jump in. The expectation was still for a new structure low. So I looked at a complex correction of this, and where would that take price? And where would that take price? And that took price into this general area. So I was committed to wanting to sell into this area, wanting to sell here. However, I did not. I did not because price started accelerating up, and I knew this area provided good structure, good resistance, and only would have gave me a better average in price. Okay, and because of that, and the fact that I was near these highs and my stop was right above that, I was only adding a little more risk to my overall trade. Okay, so I was in here at this level. I averaged in here on the rotation and the rejection of the area, which was phenomenal. Okay, then the market went down a little. Oh, my average in price ended up being at 209. Okay, 209. If you go back into the charts, you'll see that that was my average in price. Okay, so I was in at 209. Okay, the market rotated here very nicely. I got filled. Pardon me, which gave me an average in prices. This does 2 things. 1, it improves my risk reward, and 2, it gives me an opportunity to get into a better break-even position or graceful exit if that's what I'm looking for. Okay, the market gave me an opportunity to exit at +1, but it literally, I was +1 for like half a second. I didn't have time to close my trade. Plus, I started seeing some of this move to the downside, and I saw, okay, this area is going to hold. It sold off nicely in the past. We may get a rerun of that. Plus, the bears had accumulated more orders overall. That was my thinking at the time. So I hesitated, and I had an opportunity here to get out for -2, even at 0 a couple of times, and I said, no, let me wait. I looked into the short-term order flow, and I saw what's not as clear now, but it was clearer earlier when the candles were differently, of course. But this area showed short-term support and resistance. Okay, on a couple of candles here. So as price came back, giving me that graceful exit opportunity, and I hesitated on getting out, and I saw price going against me 3 or 4 points. I'm like, okay, what should hold? If the sellers are going to come in and they were serious about this short-term new structure low, what should hold? So I looked across and I saw this whole area here. I'm like, okay, that area should hold. So I dragged my stop down to here. So okay, now I'm only risking 10 points. I'm still getting a better exit here than if I would have just exited here by about $80, $90. So I saved myself $80, but I had a true opportunity to get a graceful exit and a break-even trade for the day. But my hesitation, my short-term order flow thinking was telling me that we might get into a situation where price may find resistance somewhere around here and come down and maybe have a complex correction into this area. I was expecting this area to kind of try to hold, and that's the area that I wanted to exit for about 8 or 9 points of profit, which would have given me about $600 or $700 for the day. I ended up losing $630 overall, but I wanted you all to see the reasons behind why I entered here. You might say, my God, look at the projection, look at the momentum here. Price is going up. Yes, price is going up, and in the short term, my expectation of a new structure low is unrealistic to some extent, but it's still the expectation in the longer term. And all we have here is just a series of complex corrections off of this main high and main low. We could have been looking at something deeper substantially to this. Now, I wasn't willing to test this area again, but the expectation was, 1, for this area to hold, 2, to get that graceful exit. When I got that opportunity, as price behaved as I expected it to, it wasn't for but a second, so I didn't really have time. And then as price hung around here, I started analyzing the short-term order flow, and I saw pretty good momentum coming down, pretty good new structure low. We may get a pullback into an area of structure that's right here, so this area should hold. I put my stop right above that and say, okay, I'm willing to give it this much room. It's only $600, small price to pay for the opportunity to maybe get something that gives me some profit for the day. So it was a chance that didn't work out. So I ended up taking that small hit. But those were the reasons why, and that is the difference why I didn't add to a losing position. I added to my position. The risk reward improved dramatically as I was in here, and then I averaged in here, so I saved myself about 15 points, almost 15 points. And I gave myself a better opportunity to exit this trade with some profit. It didn't end up working that way. I ended up taking out. I was happy to be taken out at that point, as I was down considerably when price was up here. Okay, but I was also prepared to take the hit above this had price, because I didn't move my stop loss, if you would have noticed from the charts. So it's one of those things that whenever I enter a trade, I want you all to know, and you all should get used to this practice. Where I put my stop is where I put my stop. Okay, initially it may be here, it may be there. I'll adjust my stop to the appropriate level as the trade progresses. I'm not going to add more unless I have to. Okay, but the appropriate place is the appropriate place. And I apologize for my dog. The appropriate place is the appropriate place. And when I enter that trade, I'm prepared to take that hit. I've already accounted that. You can get into a trade and have all the probabilities on your side, and that trade can still turn out to be a loser, and that's okay. If you followed your trade plan, you followed your rules, okay, good things happen in the long run. You might get hit in the short term, you may get hit a couple of times in the short term process, but the expectancy doesn't change. It's when you start changing and replacing your rules and taking profit early or readjusting your stop beyond the limits that you're supposed to, that's when you hurt that longer term expectancy. Okay. Once you get into that trade, you can have all the reasons in the world, but once you're in that trade, you no longer control what's happening. You can control your reaction to what's happening, but you cannot control what price is going to do beyond your entry. You can't control it before. You can anticipate, you can forecast, you can think. Okay, but price does not move in straight lines, and price is always going to either come short of your expectation, fall, go beyond your expectation. That doesn't mean you were wrong. Okay, but you need to use that information to know whether your expectations are strengthening or weakening and trade those expectations accordingly. Okay, I don't do this often. I don't like to do it, but it falls within the probabilities as I have a market that's weakening against, that's strengthening against me. Okay, the market is going up. I have a clear line in the sand as to where the market should not go. I got rotation in a place that gives me an opportunity to get out of this situation with minimal hit or with no or without a hit at all. I got that opportunity. I just didn't take it. Okay, so because I wasn't quick enough to take it, since price was only there for a second or so, I'm like, okay, what's the next best case scenario? Well, the next best case scenario is, if the bears are serious, then this should hold. Let me put my stop right above that, because I do not want to take a full hit on this, especially when I have 12 contracts on there. Okay, I hope that was clear. I hope you understand the reasons. I know I talked fast through this. I didn't want this video to be too long. And if you have any questions, post them. If you need one that explains this in greater detail, slower, then I'll put another one together. Thank you very much. Good trading. I hope this video had value to you.